And let me know what the link is. So we can.
All right, we are live, I believe. I'll share you the link. I think I can send it in the comments in here. Let's see. Oh, yep. Okay, I'm about to send it to you in the comments.
Great.
Right there.
Sorry, we're having technical difficulties with the new system, everyone. Or anyone that's here.
Trying to get
I
that.
am dealing with an echo. It's going to be challenging.
Quality.
Concentrate.
What? We're trying to get that 1080p quality for our loyal viewers.
I know. Oh, here. All right, I'm going to post this to our Twitter. Let's see. At least I can. Oh, yeah. The quality definitely looks better.
All right. Let me see what happens if I make it the solo layout. See if it switches to whoever's talking. If not, I'm just going to go back to the one we were just on.
No, it's just me.
Just you? Okay.
Yeah.
All right. I think this one will work for today.
What? Yeah.
I think
we'll just have to go with it. Let's launch in.
So we're doing a special Friday update. If anybody's joining and hearing this, you can ask questions. We're going to try to answer as many questions as we possibly get. That's kind of the point of today. So we would love to get some questions. But until we get some, we have a few topics. And I think we want to touch on Apple first because there was big news yesterday from China, and Apple dropped immediately about how they're going to possibly, well, I think they did actually ban government employees in China from owning an iPhone, which I remember hearing yesterday. It was somewhere between like 1 million and 2 million units, I believe. It was actually a lot of iPhones. So do you think that's a lasting impact on Apple, George?
I mean, it's interesting. I think the bigger thing is that Apple has like a lot of manufacturing in China. Obviously, I think it's like Foxconn is who they use. So there is definitely. Oh, the echo just stopped. I don't know if you did anything. Oh, it's when you mute it.
I'm gonna mute myself. Yeah.
Great. We can just do that whenever we unmute when you're talking. Oh wow, this is lovely. So yeah. I think more than anything, it's like how much is like Chinese government employees, how much is that like really affecting like Apple phone sales? What it is a concerning part of it is a lot of their manufacturing is there. So like if things escalate, especially there's kind of like, I don't want to say a Cold War going on with China because it's very different than the Cold War, but it is a little something like that where it's just like there's starting to be these like this back and forth between us and them. I would say all the way back to Trump started, and I would say like I tend to be pretty on the middle politically, but like I would say that's one thing that I did like that Trump did. He did actually start to take some of the actions that China was doing that were kind of like hostile towards us a little more seriously as like pretty much all of the administrations before that were pretty friendly to China, even as they were, kind of kicking our butts in some areas. But I do think we're going to see that escalate because it has continued. Now it is both Democrat and Republican then Democratic presidencies that have started to become a little more hostile towards China. And I would say for good reason. I think they've been, kind of trying to beat us and doing things that were like more hostile towards us than we returned for a long time. And I think that's generally because the U.S. saw an opportunity to make money. And anytime they see an opportunity to make money, especially like, a lot of U.S. private equity funds and things like that wanted to build businesses there, I would say that was our the general reason for the friendly policy. But yeah, I would say that there are definite concerns for their businesses if tensions rise. Because China really depends, like not only I would say on the Chinese market, if there's more restrictions outside of the government, which could be a next step versus government officials. And then obviously, like if anything affects their supply chain, Apple is not going to get the same kind of lower priced manufacturing that they do with Foxconn or in China, anywhere else, or, they might, but that isn't something that I would bet on. So yeah, like I would say there are bigger concerns and it's definitely like we talked about Apple being kind of the least favorite of our 7 FANG stocks because it is actually one of the only ones, especially whose core businesses are shrinking. But yeah, I think that this thing is definitely a concern and start of it, it's just like because China, like in this, like, we'll call it a Cold War light because it isn't really weapons. It's more just like diplomacy and more like economic warfare, you might say. If this escalates, because it is like cold, it will only be in certain areas. And if it looks like Apple is a battleground that they're going to fight on, that could be very bad for Apple. And obviously, we kind of are fighting on TikTok, and they're kind of like, if Apple is one of the ones that they're going to single out, there could be like, bad news for TikTok and bad news for Apple in the future. And that's not going to be great. And similarly, we kind of were checking out, adjacent to the Apple story, we were checking out Qualcomm. And the interesting thing there is that, you were, when I mentioned it had been low in Prospero and, obviously the price isn't moving very well, you had mentioned that it, might be related to this, but it actually looks like it is tangential to this, where there is increasing concern that Apple is going to start making their own chips as opposed to buying Qualcomm's. And obviously that is that is a major threat to Qualcomm's business. And, you might even be able to tie these stories together where you're saying like, oh, China's maybe concerned about manufacturing. They're starting to say, oh, maybe their relationship with Foxconn is threatened. So maybe they're thinking about making their own chips a little more, which affects Qualcomm. And this is the kind of thing that, as a value investor is really important to look at because you want to understand all parts of it. And I can't tell you how many times I've been digging into one investment and realized that I found like a better opportunity. Like, and in this case, I'm not quite ready to short Qualcomm because it has gotten hit a little bit. And, I'd like to know more about the story and maybe see it play out a little more, especially with like this AI craze. Not a really good time to short chip makers of any kind. And Qualcomm is a pretty big one. But this is a concern that I'll have my eye on, and just like a great example of how when you dig into one trade, perhaps you even find a better one. And if we're talking about if I'd rather short Apple or Qualcomm, I'd probably rather short Qualcomm, given that Apple is still Apple and they could find a ways around this manufacturing. It could not even be a problem. There's talk of like, we talked about it last time, perhaps a new product launch, excitement around the VR headset, etc. So yeah, I'm not quite ready. It is definitely something to keep your eye on with Apple. And I don't like, especially given this, I wouldn't be long Apple right now. But yeah, it's at the end of the day, the thing about, as much as they bluster back and forth, and I do think they will continue to do things that like bother each other and prod at each other and a bit of a tit for tat thing, like the economies are so intertwined. And at the end of the day, like both China and the US care more about their economy than anything else. So there's some mutually assured destruction. Yeah.
I hear you. I see you hear my echo now again, but I just want to ask a question. I know there's a certain limit that of like vertical integration I think that companies are allowed to do. So if all of these tech giants like Apple, Google, and everyone start making their own chips, do you think that would cause monopolistic problems for them?
No, I don't think the chips, like vertical integration, all that stuff is more about acquisitions. But it might threaten other acquisitions that they make because it adds another rung to their business. Like, I'm not sure, like, for example, Apple acquiring Qualcomm would be allowed, but like Apple's less of a monopoly, especially with all of these like Android threats and things like that. Oh, I realized I never posted our live streaming link. I'm doing that now. Okay. So yes, I just think that certain things like Apple is not really the big monopolistic worry, and like chips, anything making your own chips, that kind of thing. But as we've talked about many times, like the main monopolies as I see them that have just been allowed to exist are Google and Amazon. And Google starts making their own chips, like you kind of have to look at it in the context of what they're doing. I think the monopoly thing is like search and how they basically monopolize how people find products, and there's no real threats. so they can really, charge however much they want, that kind of thing. That's what really makes them a monopoly. Adding chips to that, I'm not really sure. But like I'm saying, were they to start acquiring other big businesses, yeah, like that's when the government starts to step in. But like nobody's really going to stop you from adding a line to your business. Or like I think Amazon, like some of the stuff Amazon is doing in healthcare, shipping that they're planning to do, like that becomes like I would say like a bigger monopoly, especially like if if you take it to the end, if you talk about Amazon, say like doing everything from manufacturing drugs to shipping them themselves to selling them, that's pretty much like definitionally a verdict. Like that's pretty much like what the trust busting of like the Gilded Age was doing, breaking up companies that were actually like a little less monopolistic than that. So we'll see. But yeah, like Apple is like the one big company that is actually like has a lot of threats, I would say.
Yep. So it's going to be interesting to see how this Apple story plays out, especially with their investor day or their product launch day next week. So we'll stay updated on that. If there's anybody new in here, feel free to ask us questions and we'd be happy to answer them. But I think we wanted to talk about Airbnb a little bit too, because they just had a new law, and we've talked about it in the past a bit, but that law is in place now. And we wanted to update on Airbnb as a whole and their New York business now.
Okay. I am going to take one more look at Airbnb, what it's doing today, because it has confused me a little bit, to be honest. Like it's still up a little. But yeah, like to me, I'm very concerned about their business, not only because of like, I think what is going to be some trouble in the housing market, but, also just the fact that when these laws get passed, yeah, they're solid. They continue to be solid in that option sentiment. If anything, they're on an upswing. But it doesn't. The way these laws work and have worked in the past is they get passed one place and then they get passed in the other places. And just so people know, this is like on the other end how it works. Airbnb started, Uber, places like that. They start in these small markets, and then when they basically get sanctioned in those markets, they get bigger and bigger, because even if they're not sanctioned yet, they use the laws in the other markets to get approved in other ones or implicitly get approved. And just so everybody knows, that's a lot of how law, Supreme Court, like marijuana is a really good example of how that works in a different business, where it gets passed in one place, it gets passed in all other places, and then eventually it goes federal, but it kind of like springs up. So this law in New York, where they're really hurting temporary rentals, they've created a template that other now local governments or whatever can build on. And so I'm not really sure why that is. That like maybe it could be that when it was kind of announced and went through versus when it happened, like buying the rumor, selling the new stuff, and people are just maybe anticipating it just being New York. But me, like I'm looking out for a short opportunity there, and I really have my eye on especially net option sentiment going down, because that's an absolute concern of mine. It's a good short to own because like the second, you might have another market. Yeah, I would expect, how it works like in the reverse is I feel like something in San Francisco happens and then LA, maybe Portland, Seattle. That's how like it works when tech companies are like trying to get these laws passed, trying to get new stuff. But like in the reverse, I see like something on the East Coast. I could see like maybe like Boston or Philly, maybe Miami next, passing similar Airbnb laws that are anti-Airbnb. But I don't know the individual like governments well enough. It's possible some people like it for tourism. I don't want to speculate on that, but I am looking for an entry opportunity. I do think it's generally a good short. Just because like if something like this passes, if you hear about like Boston, for example, which I do think is the most logical one, taking this New York law and also limiting short-term rentals, like I could see it losing 20 or 30% in a day, which is why, like, yeah, it might have some upside, but that could be a really good gain on another one of the, like, on the next domino fall.
That's what I want to ask you about. Do you think there's a future where Airbnb will just be crushed by the government and laws? Or so like that would be pretty dire for them as a company. They would be almost obsolete at that point. Or do you think they just are trying to make them not grow rapidly and quickly?
I think, especially as big as they are, when capitalistic enterprises get to a certain point, like, they have enough power and they have enough, like, when there's VCs and, like, people in certain places that stand to make money or lose money, based on how a company does. I guess they're public, so it's like less, but in ways that makes them more powerful. But yeah, like at that point, I think what ends up happening is they start to look for more reasonable legislation that, like, there's some common ground regulation that starts to happen where they attempted, but places like New York obviously don't think that went far enough. So they might even have to, negotiate with other places. Like, it's kind of like a shot fire, right? Against, like, it's like the hotel lobby, all those against Airbnb in New York. And that's their opportunity to figure out a way to come to the table with those powers that be and figure out a solution. That's what tends to happen when large businesses or large, go up against, other, powers that are losing profitability with it. That is what I would bet on, but there's some hurt for Airbnb in that. But I don't think what you're saying is without question. Just because, like, in terms of these things getting settled, old tends to get priority over new. So like the hotel lobby, like real estate developers that might be feeling their rentals not, getting enough attention, et cetera, et cetera. Yeah, those places might actually win. I wouldn't bet against them either, but I don't think, I don't necessarily think that, I don't think that I expect this to kill Airbnb, but I don't expect this to be the last of the troubles. I do think that they will figure out a way to, like, piss off the people trying to end them a little less.
Yeah, I guess they're gonna have to start playing by the rules of the people that are in charge, and they'll probably meet somewhere in the middle. And okay, so next we want to talk about a little bit of macro, right? Or do we have another topic before that? Macro?
Yeah, I think this is the last topic, right? Yeah. So just want to say this is not a whole hour stream. If you want us to keep going today, we're gonna only do so with questions. So fair warning, could do my macro talk. We don't have any questions, which is fine. If you guys don't want to hear us talk more, we could go about the rest of our days. So yeah, I think that there's been some, kind of interesting up and downs this week. I've been starting to feel more bearish again. QQQ, SPY net option sentiment, I would say reflects that as well. And yeah, basically, I think that what we're dealing with here is uncertainty, and a lot of uncertainty. And I think people generally, we obviously talked about how, like, Buffett and, is kind of gearing up for a recession. A lot of people had a problem with me saying that, but it's when someone goes to a cash position, that's what they're doing. If you don't want to say recession, they're preparing for a bad market. Like, some people have a lot of sensitivities to the word recession, but actually we've technically been in a recession, or we're in a recession. So it's not that, like, there's a lot of other things about, like, a government, an economy and the health of it, like whether recession or not. And especially, like, the stock market has proven to be, like, very different. So yes, I am definitely seeing a lot more. Like I think we started to see some renewed confidence in tech, and maybe the tech prices were getting a little lower, and that they were going to bounce, which is good. It's healthy. It means that basically, like, people see real long term value in the AI plays, the tech plays, etc. Um, but it also just basically means that people are worried that we're bouncing between these levels where they're just like, all right, we might be a little too low for that. But like once we get to a certain height, we now think we're overpriced because recession worries. So I do think we're going to like trade in that channel. We might see more support at those levels. But yeah, I think it's only a matter of time. Like I think essentially like now we're not expecting a rate ease. Like there's only a 2%, the market's betting on only a 2% chance of an ease this year. And only a 12% chance of an ease in January. So we're pushing that back. Like sooner or later, especially with the personal credit crisis, there's going to be a bit of a hurt put on the economy. A bit. And that doesn't even necessarily mean there's going to be a hurt on the stock market. But when people start feeling it in their wallets, they start to sell stocks, and that can really like snowball. So I'm going to be pretty cautious on the kind of on the like bullish side. I stayed neutral this week, even though the signals were like I'm actually pretty happy with myself that even though there was pretty bullish numbers in QQQ and SPY net option sentiment, I expected them to go down, and they did it, and they did. So I stayed pretty neutral in my portfolio, and I'll continue to stay pretty neutral, maybe even flip a little more bearish this week. I think like this week I was 4 longs and 4 shorts in my newsletter picks. I might be something more like 5 shorts, 4 longs, or 5 shorts, 3 longs, something like that. Maybe 6 shorts, 4 longs. That's how it's looking today. But yeah, I don't like the market is definitely has a limited amount of confidence right now. But I would say the good news on the other side is that people are, even with that worry about what's coming with the rest of the year, they're still bullish on tech, which is why like I'll probably, if I do go long, continue to go long in tech.
Okay, and we do have a question from Mario. A couple of weeks ago, you mentioned that when net option sentiment changes by 20% in a week, your backtest shows potential 500% returns. Is there a way to scan for 20% or greater change?
Yeah, well, that's exactly what we're working on. Like we're building an alerts product that will launch in the Discord, maybe even within the next, maybe even the next month or so. It won't be live in the app until we've tested it in the Discord for a while. So I would suggest people get in the Discord. I'll post a link for it if you're not in it yet. And that's where it will go. So I'll do that I'll just do it here. Just so people can do it right now. But yeah, like what we tested was that a 25% or more move in net option sentiment from the 7-day moving average. We saw, I think it was something like close to 500% return if you held that stock for 24 hours and then sold. So basically like a set trade. So yeah, we're working on that. We actually only discovered that relationship because I was looking at building an alerts product, and I was always telling people like, net option sentiment is unique to a stock. You basically have to look at it. You have to know like Tesla runs higher, finance stocks run lower. So it was basically only after saying that to people for like maybe a year that it occurred to me to even test for the moving average. So yeah, we're working on that. We wouldn't, if we found that relationship and we knew about it, we're obviously working to get it in front of users as fast as possible. I will be honest, that will be a paid product. But just so how people know we think about that is like we want our signals to be universally accessible to everyone. Free. So that's why we have a free newsletter. That's why the app is free. But in terms of like delivery mechanisms, something like that is a 24-hour trade, like not only do we have to pay for the infrastructure to make that work, to have those alerts fired, all that stuff, that's beyond. We also, I also don't think that it should be free, because we're talking about like a 24-hour short notice trade. Like, and if someone can't afford, to pay for alerts, I don't necessarily think they can afford to be taking risky trades that go along with a trade that you hold on for 24 hours. So that's how we think about it philosophically. But yeah, I think that is, that's how it works for us. And hopefully we want that live as soon as possible, but we want it tested first. And we want to make sure that when it's delivered, like, I don't know how many, people know this story, but quality control is super important to us. And I didn't even let anyone use the Prospero signals in the app until I had used them for about 2 years. And I could trade successfully with them consistently, because my thinking was that unless they worked for me, with coming at it with a lot more experience, they weren't going to work for anyone else coming at it with less experience. So I held it to a pretty high standard. And I still QC everything. And for the foreseeable future, that will be the process. Because, we have a team, we all put our stamp on everything. But to me, like, my personal stamp has to go on it as well. And so that means I personally test it and I personally trade with it. So yeah, that's part of it. We're still in the phase where I'm looking at it. I want to make sure those relationships hold. And that's why it's going to go to Discord first, because some of the people that I know how to use the signals better in a smaller group. I'm going to test it with them. We're going to test it with them, and anyone can kind of be a part of that joins the Discord before it goes out to a larger group, and before we put it in a product that's firing automatically.
So you guys can join the Discord through the link that we shared in the comments if you're interested in that. We got another question. So thank you for your question, Mario. Hope that helps you. We got a question from Cribby. If UB goes up and DB goes up at the same time, is it something to think about?
Oh man, life without the echo is so much better. I get it back for a second, and so yeah, it's something to think about. Here's how I think. Here's all of the following things I think about upside breakout and downside breakout. Like, I think generally, if you're above 80 in one and below 20 in another, it's generally good. If you have, like, if upside breakout minus downside breakout is 30 or more, that's generally good. The individual movements of it is so on a case-to-case basis that, like, I'm not going to say it's good or bad. And, like, we honestly built them. There are some inverse relationships, but the reason that they behave in their own way is by design. Because if they were inverse and just like, what if you had 100 upside breakout, you had 0 downside breakout, then what would be the point of having downside breakout? So yeah, so I mean, essentially, probably what that means is that there's an increase in demand for calls and an increase in demand for puts. So that jives in the long-term markets. That jives for me. Like, there's not always going to be agreements among institutions how they want to bet, and there could be institutions that are bullish, there could be institutions that are bearish and are coming in at the same time, raising both of those values. Now, like, if you're familiar with seeing upside breakout go up and downside breakout go down, that's because it's, that is also logic. That if more institutions are, like, if the demand for calls, long-term calls, is greater than the demand for long-term puts, you're gonna have that relationship. But and some people, obviously, they can work in turn. If institutions see a lot of people buying calls, they might decide to sell their puts. But the thing about it is, like, and it can't be stressed enough, because like some people, like, I'm sure if you've been watching me enough, this is not new news to you. But institutions win and lose every game. They fight every day. They fight each other. Very smart people on both sides are winning and losing. So, what does that tell you? It means that it's very hard to be right, even as someone with lots of money, lots of resources, lots of smart people. And some people are just going to disagree. They have different information, and there's going to be a winner and loser in every trade. And what are the numbers? I mean, I think it's just like some crazy, I think it may be like 90% of money is like institutional, or I don't know, like at least 80% of trades I think are institutional trades, and like I think it maxes out, but I think sometimes as much as like 90% of money. I don't know that exact quote, but it is a lot. It is definitely like most of the time at least 80% of trades, right? So if you look at it that way, like yeah, sometimes retail's losing, and a lot of people in retail like feel personally harmed by it, but like on 80% of the trades, there is a losing institution on the end of them, and to think about that is pretty staggering. So yeah, it's not surprising that you'd see like that in many cases you'd see demand for calls and demand for puts going up at the same time for an institution. That essentially just means there's risk. A lot of the times it means there's an event that some people are betting on and some people are betting against. And the easiest way to understand that, and why I don't really like biotech stocks, is biotech, right? Let's say you're talking about a drug getting approved, and like nobody has access to those clinical trials, although that's essentially what Steve Cohen's SAC Capital went down for, trying to get inside information on those trials, or I should say successfully. Yeah, like some people do get inside information, some people have input, but like you could easily see a big clinical trial coming up, and very smart people buying calls and very smart people buying puts because they think they've got it figured out. And it's a very hard thing to guess. Like a lot of the times, if you have these people making these bets, they have tons of experts and doctors advising them on how it's going to go. So I think that's the easiest way to understand how they might go up at the same time. But any relationship, I would say how I look at it is any pattern that is unfamiliar to you, that you see, it's worth digging around on. And like for me, Prospero helps me make quick decisions. It helps me filter information faster. And it was really built for the problems I saw first. And then I kind of talk to retail investors and see how it could further help them. But the signals were built to help me first and foremost on problems that I couldn't figure out without better tech. So how I look at that is when I see something weird, some relationship I don't understand, I start reading the news and I start reading what's going on, and I start looking at the financials, and I figure out like why there's a pattern that is unfamiliar. Like, Steven and I did it this morning when he was asking me about Qualcomm, and I was like, okay, let me go read what's happening with Qualcomm. And in like 3 seconds, I was like, oh, looks like Apple is like maybe making their own chips. And I can't stress enough, I love the Prospero signals. They help me make trades every day where I don't have to read the news and I can just make money. And I know that's been other people's experience too. But there is no substitute for, especially if you're looking at the signals and you're just like, I can't make sense of this like I normally do, dig in further on the research.
Thanks for your question, Kribby, if that is how you say your name. Hope that helps you. If anybody has any further questions before we go, this is a nice special live stream. Test out the StreamYard.
We got the high def and the echo.
Yeah, it's looking good. I got to figure out this echo.
Yeah, I think we'll try like maybe right after. Well, we'll talk. Maybe right after this, we'll have a little bit more for questions.
I can end the stream, but keep us both in the studio. So maybe that's what we'll do.
I think we should try a different. We should try Riverside or whatever. All right, we got one more. So metrics, yeah, upside breakout 30 plus. That's good. That's the general rule. If I see that, like, I want to look further. I'm like, generally, I'll not want a stock. Like for the newsletter, if I don't see that relationship, I generally won't pick it up. I did make an exception with Oracle and I lost on it, but and I think that was like 20 or like 22. But yeah, that's a good way to be safe. If you haven't, this always is like, what's the size of your portfolio is the question, right? Because like my portfolio for the newsletter generally like maxes out at 10, and that's my relationship. If like you have a portfolio of like 50 stocks, I could easily see you accepting like plus 10 upside breakout minus downside breakout. But there's something like, some people on Wall Street have bigger portfolios and some of them have smaller ones, and they say we only do high conviction plays, right? And that's what I do for the newsletter. I also have a model portfolio because I want to model how the Prospero signals would work for both. And I would say, like, if you're talking about like high conviction plays in a small portfolio, I would consider that a hard and fast rule for myself and what I would recommend for you guys. And in the reverse, like the downside breakout minus upside breakout should be negative 30 or lower. But yeah, like if your portfolio is 10 stocks or less, I wouldn't recommend taking on anything that didn't qualify for those rules. If it's more of a gray area.
Trying to stay muted as much as possible. Yeah. So what else do we want to say to that?
All right. Any more questions? Do you feel good, Cribby? What is fantastic and what is bad? I mean, fantastic is like plus 80, like plus 70, plus 80, like 90, 10 would be great. But yeah. All right. It seems like we're all out of questions. I think we can end, right?
I will end the live stream. Thank you everybody for joining, and we'll be back Monday, 11 a.m. at our usual time. So see you there. Bye, everyone.
All right, thanks.